The S&P 500 and the Nasdaq 100, as you can see, we broke our support around 19.95, went straight down into our next overall support. And ultimately, this is going to be a little bit of a red alert, because if we lose this level around 19.7, I think you fall pretty quickly down to 19.4. And that's going to be the main talks of today of what's really happening here, where are the buying opportunities, and what I'm doing in this market, because you can't fall in love with the trade. Now, again, I love some of the trades out there, but you have to be able to know when you got to get out and get into another opportunity, or know when to position yourself differently. And that's all of what today is about. Also, to you guys, if you don't follow on Twitter, I recommend doing so. We have a lot of content on there, and I keep you guys posted throughout the day, so make sure you're following there. Now, the first thing I want to jump into here, this was about middle of the day, around roughly noon. So, right middle of the day, lunchtime, right? This is the overall market, right? And what was really moving us. And you can see the really red area here was primarily semiconductors. 5% on NVIDIA, AVGO almost 3%, QCOM 3.5%. I mean, this is what really hurts you on the day. Netflix was also down in tech, but besides that, nothing else is really hurting. When you look at stuff like Amazon, which was pushing its all-time highs, it makes you a little bit curious what was really driving this market down. But again, it was really this right here, semiconductors, which have had, some of the best reactions and best carries on the market over the past few weeks, but today obviously did the opposite. SMH, as you can see, continues its decline, filling the gap there, but ultimately looks like it wants to drop deeper as well. So these are all areas that I'm watching personally right now here in the broad market and what's really happening here. So things you have to be paying attention to as we move forward, because again, XLK looked good for a better half of the day, which was trying to push up, but ultimately gave it all back up. As you can see, you opened up, pushed up, and then dropped back down. And that's what's taking place here, right? We look at other areas of the market with the Dow, XLF, looking pretty promising, bouncing up. We look at XLI Industrials. It was bouncing up for the first half of the day. Healthcare, bouncing up, right? So these are areas of what's happening. But I'm going to tell you right now, in my opinion, a sector rotation can only look good for so long. So if we start to see Dow getting that love, but Nasdaq continues to drop, I do believe Nasdaq will lead the market towards that downside. Now, am I saying a crash is coming? No, I want to be very clear about that. What I am saying is that it looks like in the short term, it looks like downside might be imminent, especially if we break through these levels. But there's one area of the market that I do like that we're going to go into here in a second. But first, let's go into this.
And now let's briefly talk about my favorite investing app and the sponsor of today's video. If you're interested in trading the exact same broker in which I'm using for options and what I'm doing market research on, this is exactly who I'm using. This is Moomoo. This is their platform on their desktop. You can also check it out for the mobile app as well. This is their live news feed. And if you're thinking about making the switch right now, is a pretty good time, because right now they're doing a 1.5% cash reward up to $300 if you transfer in. Or if you're just getting started and you want to kickstart your journey, Moomoo is giving you 5 in each of the Magnificent 7 stocks when you make a qualified bonus. You can go down and scroll and see all of this. It's right there on their website. Check them out. The link is down below.
Now, number one, when we go and look at oil has been the ultimate tool to understand what inflation is doing and if inflation is going to cool or if it's going to start heating back up. And as I look at oil, the really interesting part that got all of this really fueled was oil dipping dramatically down past the 200 weekly SMA, right? And then you're bouncing back, and it's been one of your best recoveries so far on oil, pushing back. And you can see this nice little pennant that you're making down here. Now, if we also go and look at XLE, this is where things really come together. As you look at XLE, the energy ETF, you're making a clear ascending triangle on, like, this is the daily chart going back to 2022. I mean, energy looks explosive where you're at, making clear higher lows over the past 2 years. So when I go back into oil, something very interesting here. And I want to be really clear. I don't think that this oil chart affects inflation yet. I think it's going to take time. Probably next month, not the beginning of July. So that's my personal, PCE should not be affected heavily by this, in my opinion. Okay. So looking at oil though, I think the hedge potential on tech and anything that you're long on, you're getting the opportunity to protect yourself. Why? Because when we look over here, and this is something I was telling Discord today, we go and look at something like Exxon, for instance, right? And you look at Exxon, these 120 contracts for January of this coming year, 2025, right? Right now, they're at about $5. Previous April highs, you were at 12.5. We can cautiously, conservatively say we might get back into $10. Okay, conservative, right? You can go at the monies, right? Well protected here, right? Highs of $19 are currently at about $10. Again, things to be looking at. Another big company that I'm watching is something like Oxy. one of the biggest investments from Warren Buffett. And this is something that we've been mentioning, the Buffett buy zone, right? Every time it's dipped back down to $60 to $55, this has been a buying opportunity. Okay. And you bounce out of the zone back up to 200, looks likely to get back into 67, 68, possibly even 71. So definitely worth mentioning and watching here. All of this I've posted on Twitter to keep you guys posted as well. But again, other names that are a little bit cheaper if you're interested with dated contracts for hedges that make sense, right? Again, $65 right outside the money at $4. I think at 30 cents at the end of the day. We'll have to see where you closed at. But anyways, still looks good. You can go 70s if you want. Do whatever you want right there, right? So anyways, great hedge opportunities. And I think these hold and retain value better than most things. Again, the trade setup you're looking here on Exxon is holding with the 200 SMA as long as it happens. You're breaking out this little downtrend as well. You know, you look really good also. So make sure you understand what you're trading, what you're looking at, where the breakout opportunity is, and everything along those lines. So that's the area of the market that I'm liking. Other stocks that I've been talking about too. Target. I told you about this one on, I believe, Thursday, maybe Friday. I don't remember the last time I made a video. Okay. Again, today, awesome. You broke out. You had a quick surge. Awesome reaction. Awesome movement. Okay. I ended up buying some more Apple. But like I told Discord, something that I've been doing myself personally is when you get volatility on Apple, I've been closing out my shorter dated contracts, anything before January 2025. I've been either trimming half or all of them, right? And I'll just reposition back in. Because ultimately what I'm trying to do here with Apple, and I keep saying is I want to hold my 2025s and I want to be able to make money off my shorter dated contracts to protect myself with any kind of type of downside. Because if we start losing 206, I'm canceling my Apple trade. I'm just getting out of it. I'll re-enter at a later date. But for right now, that's what I'm watching. So Apple, tech, that's what I'm doing there. I want to make sure people understand my viewpoint. I'm not blindly holding, never selling, never taking profits. I try to have a plan with everything that I do. So hopefully that makes sense when we look at what I'm doing here and where I'm also trying to find other opportunities across the board as well. Really quick, we're going to go into DXY though, and look what's happening here. We do on this week, we don't have any crazy news or data coming out. Friday, you do have your PCE report. But until then, I don't think Friday. It's Friday. I'm sorry. So we have Friday of your core PCE. You have more Fed members talking. That's your biggest amount of data. You have some, jobless claims, but that's about it there. There's no reason for there's nothing that's going to really change this trend, in my opinion, until Friday. You have GDP, but none of that's going to be as big as PCE. You got to see continued inflation data to the downside. But that's ultimately where we're at. And we look at the dollar, great bounce back to the upside. We like the way you were moving, but you're just not getting that continuation. The only thing that still looks really good here for stocks right now is the US 30-year yield. You're continuing to reject off of 4.42. And I will say this repeatedly. I do believe the 30-year yield will continue downside until data shows otherwise. Okay. So until inflation data comes out bad again, US 30-year yields will drop. So I still am net broad based on the market bullish, but I'm being more careful here now. Why? Because of specifically what oil's doing. This is when I got really bullish, was when oil was tanking and was dropping, and we knew that this was going to start being priced in. And I still believe the data is going to be good for the next 2-3 weeks, most likely, unless something changes with oil. If this continues with oil where you're pushing back into 85, 86, I could see the downside effects on oil and what's going to happen with inflation. You can also go back to last year around the same time, okay? Worth mentioning. Right here, the end of June, going into July of 2023, that's when oil surged around the same exact time. Now, I'm not saying you're going to have this crazy oil surge, but I'm just saying to tread carefully here. I like how we're moving. I still think there's some opportunities, but again, unless we see some slowdown in the selling on semis, and I'm telling you right now, NVIDIA's added support, but I told you guys on Twitter already, I said below 125, you look bullish, but below that, you look very bearish. And you losing this level now, and now you start to lose 118, highly likely if you break 118, you're coming down into almost the $100 level. Highly, highly, highly likely. Okay, that's just my personal opinion, what I'm going to be looking for personally. Again, it would be an amazing SR retest here, where you consolidated basically from March 2024 of this year basically into May, where you just consolidated sideways and eventually broke up. So again, opportunities are going to be there, setups are going to be there, but we got to be vigilant. And I'm telling you right now, I've been a very big bull, but again, the things that could hurt us in the short term, specifically is any bad type of data reading, but also too, oil will set up the resurgence or the negative effects of inflation. Because the premise of this over the past few days and weeks has been make as much money as possible during this nice run that we were going to get. And we were saying we were very bullish. But the crazy part here is you've had a better part of this run. You ran about 1,200 points on NQ. And literally, I mean, it's actually kind of insane to think about. 1,300 points, okay? From June 3rd to the end of this month. So in three and a half weeks, you ran around 1,500 points on NQ. And that's just incredible. Like when you really think about it, that's an incredible run. And I didn't think it was going to happen that fast. I really didn't. I thought it was going to be more drawn out, but it is what it is. So I'm still bullish, still looking broad-based on the markets, but I'm preparing myself what oil looks like it wants to do once again, which is something that we've done time and time again here on this channel, is pay attention to the key warning signs. And I think there's a few warning signs out there. But again, I want to be very clear. Despite me being kind of bullish here on oil, I want to say right now, I still think there's money to be made in some of these other equities and these other stocks. However, you have to be careful. Short term, if you're bullish or you're looking for upside in the market at all, you want to see Nasdaq bounce. You have to bounce this level if you're Nasdaq. If Nasdaq loses 19.7, I believe you drop down to 19.4, 19.45. Almost, it's going to be pretty smooth. It's going to be like cutting through butter here, guys. It's going to be simple. You can see there is no liquidity. From 19.7 to 19.4, there is nothing. That's the easiest short out there. So again, what I'm watching, what I'm preparing for, and again, the big opportunities that are potentially right in front of us over the next few days and weeks. So again, I'll be watching that under 19.7. I will be most likely trading the short to the downside, specifically on the market, and looking for more upside pressure from oil and energy there, because that's probably the hottest looking sector broad-based in the market right now, and where I think most of the opportunity lies. If you have questions, comment down below, follow on Twitter. Have a good one, traders.